going to a 6% rate, that is about $290 a month. So quite a bit of savings.
Hey there, everyone. Jamie with Sell for 1%, joined as usual by the Sell for 1% gang, Jason Barlow and head broker Dave Barlow. Also joined with Rich Cercone at Equitable Mortgage, here to talk a little bit about interest rates, state of the mortgage business. Rich, what are you seeing on your end?
Hi, Jamie. How you doing? Well, we've had quite an interesting week here. We had the three big numbers that everyone was waiting for.
With bated breath.
With bated breath. The employment numbers on Friday came in a little weaker than expected, and as we said, weak employment numbers are good for interest rates.
Oh boy,
a little bit weaker, not anything alarmingly weak. And then we had consumer price index numbers yesterday, producer price index numbers today. Those are both measures of inflation. Both of them were pretty much at expectation, but slightly higher on some aspects of the number when they break it into segments. All of that is leading to the idea that most economists now feel that there will not be a 50 basis point lowering next week by the Fed. There will only be a 25 basis point lowering. And that was something that's been debated for a while. So the message that I think needs to be put across here is the economy is not as bad as people think. The employment is not as bad as people think. And the possibility that the Fed may lower rates a quarter and say something that indicates that, they're going to take a very cautionary approach to the future rate cuts could really hurt mortgage rates next week. So you could see a lowering of rates next week. And that is, again, that's the prime rate, the bank-to-bank lending rates. So you could see those rates be lowered next week, and you could actually see mortgage rates go up. And that's a possibility. I'm not saying it will happen. I'm saying it's possible. So people that are waiting for that to happen could be playing a dangerous game. From where I sit, I have people that I've been calling and saying, hey, I can save you $250, $300 a month on a refinance. And they're like, well, we're going to wait and see what happens with the Fed rate cuts. And again, that could lead to a win for you, but it also could be something you have regret over if mortgage rates start to go up. I have seen that happen many times in the past.
And so, Rich, would that be more based on what Jerome Powell's comments are after they lower the
Correct.
basis points?
Correct. Everyone knows they're going to lower rates next week. It would be a complete shock if they don't lower rates. So they are going to lower rates, and it's probably going to be a quarter, not an half. So not as much as people were hoping for. And then he'll have a news conference as soon as he's done with the announcement. And in that news conference, if he starts to telegraph, well, going into 2025, we're going to be cautious about future rate cuts. We don't want to get the economy too overstimulated. Talk like that could lead to higher mortgage rates in a blink of an eye. Correct.
And so how many more meetings do they have coming up?
I believe there's one in November. I'm not completely up to snuff on that, Dave, but I believe there's a meeting in November, and I don't know about December.
Yeah, I don't think there's one in December. I thought that there's, and it's terrible. We need to look this up. I'm looking. Okay, September 17th, November 6th, and December 17th. Okay, so there is one right there before Christmas.
Yeah.
Okay. And so we got basically a good Christmas, everybody. Yeah, 3 more opportunities. And like you said, it's all forward looking. It's not looking in the mirror. They're all looking at the forward. The 0.25 or %, is what the 0.25 basis is already baked into our rates right now, which are about where, Rich, and I know everybody has, their own individual platform, but
right. We're in the low 6s on a conventional loan. 6.125 would be about the mean rate. But then, you could have factors to bring you up higher than that.
Right.
And you could have factors that are lower. I actually locked a conventional loan at 5.875 earlier this week. First time home buyer, qualified for the program. So she got a 5.875 rate. So, there are very good rates out there. And the government rates, the FHA and the VA rates are in the fives. So, it's an interesting time.
And so Jerome Powell comes out with positive comments that, yeah, it looks like in the November meeting, we will lower rates once again. Then we could see rates drop a little bit next week.
Yeah, that would be huge if he said. Now, he's not going to say that quite that overtly, but if he says something that
he signals that.
If he signals it in some way, then that would drive mortgage rates down.
Right.
But it's not the lowering or the raising of rates that will drive mortgage rates up or down. It's the comments that Jerome Powell will say after that.
Right. But if he's pessimistic about lowering rates, then as you mentioned earlier, it could be rates go up a little bit.
It could be. Yeah, I've seen it.
Yeah. Depending on how and there, I would imagine he will be very cautious not to do that. But I mean, because you can just deliver the truth, which is that we're going to be data driven without having the markets go into a tailspin. But it'll be interesting to see. There's a lot of variables to play, and I think the most interesting thing will be like if rates do tick up slightly. I mean, like right now this is on the St. Louis Fed website. We're at 6.35 for a fixed rate. This is like on a national average on conventionals. Last October, we were 7.8. Earlier this year in May, we were 7.2. So we're also the lowest we've been all year right now. And everybody kept saying, well, as soon as they lower rates, people are going to flood into the market. And I haven't seen that yet, but what I'm expecting is because people don't realize the rates are already lowered, the perception of the public is, well, when the Fed makes their announcement next week, rates will get lowered and we'll get back in. And even if they do raise them slightly, they're still going to be at all-time lows for the year. So the market should pick up next week, I guess is what I'm saying in a different way. But what will be the grand experiment would be if they do go up, do you still have buyers jump in? Do they really not realize, rates are low right now? It's crazy to me, Rich, that people aren't locking their rates on their refis with you guys.
Yeah, I can't get them to lock.
Well, you're always looking into the future and what is and where's it going to be and hope and a prayer and all this other stuff that goes along with, both buyers and sellers. I mean, we still have a ton of sellers sitting on the sidelines because, well, I've got a 3% interest rate. Why would I sell and go to a 6% interest rate? Why would I double, I'll just sit tight.
And that's where these if he were to come out and say, hey, things are looking great, and give that positive signal that we didn't do 50 basis points, because I was hoping they were until I saw that kind of shift a couple of days ago. Because my thought is like if it goes into the fives, maybe that's where you see the big surge of buyers that are like, even though it's an election and even though it's fall time, rates get into the fives. I mean, mentally, that would be a good place for rates to go.
But we didn't see the bump that we thought we would see when we came below 7 into the 6s.
Right, but we're also battling school coming back in, in fall time. When did they? Because we were in the 7s really through up until July 4th, and then the market does dip naturally. So it's weird. You got always like normal, natural ebbs and flows, and then you're trying to like make sense, of rates coming down.
Right.
I'm sure Jesse can edit this chart in. July 3rd, we're 6.95. It's been nice and down since then.
Yeah. And like I say,
going to a 6% rate, that is about $290 a month. So quite a bit of savings.
The natural slowdown, or, they got buyers are like, well, we'll just wait until it gets into the 5s. And then we'll be, we'll just wait till it gets back into the 4s. And, it's...
And to put this in reality,
but they're not
someone with someone with a 7.5% rate on a low 300,000 mortgage, going to a 6% rate, that is about $290 a month. So quite a bit of savings involved in that. Yeah.
Well, and that buyer or that homeowner may be thinking, well, if I refinance now, and then I'm going to refinance again in 6 months, I'll just wait for the 6 months. You know, when
That's why we offer low cost refinancing. So you're not heavily invested in this mortgage. If they drop again 6 months later, we can refinance you again.
Sure. Sure. That's all interesting. So we'll wait and see. I am seeing more inventory here in Columbus. We track pretty much on a weekly basis. There's about 4,200 active listings in Columbus. Today, there were about 2,800 a year ago. So, we're up 1,500, listings, more listings in the market. Jamie, you deal with the buyers. You've seen a little more action on the buyer side. Now we're into September.
Buyers are definitely getting a little bit more into the market right now, but are also realizing that they, I think, have a little more of an upper hand than they used to. Seeing things like home warranties and remedies and things like that more in play, and just more selection. So buyers can be more selective when looking at houses at the moment. They aren't forced into writing an offer the moment they see a house that they like. So, yeah, a little more activity, but a little more selective on the buyer side.
Yeah, I think that, the other thing I love my train of thought with Dad is little signals. I forget what I was going to say.
Oh, boy.
Try and tell the old man, don't do signals, just let people talk and we can have a nice discussion.
Well, if you are a buyer or a seller, please reach out to us. We'd love to save you some money on the sell side, and of course, do our best to save you as much money as possible on the buy side as well. And with these buyer agency representation letters, we do offer a non-exclusive, which doesn't lock you into working with us.
I don't
for 6 months.
You're locked with me.
And if you're looking to refinance or looking to get pre-approved for a mortgage, of course, reach out to Rich Cercone, who has little to no overhead over there at Equitable. Can save you a bunch of money on that end as well. So information is up on the screen. Hope you guys learned something here today with us. I know I sure did. Hope you guys have a great rest of your week, and we will be back to discuss interest rates here shortly. Thanks, guys.
Thank you.
Just remember what I was going to say.